All righty, we are live. Guys, there has been carnage in the market this week. If we take a look at the performance of the three major indices, the Dow was down about 4.6%, the S&P down almost 5%, and the NASDAQ crossing that threshold down over 5% for the week. So some big drops in the market, and this was a couple things. I mean, if we take a look at this article from MarketWatch.com, the losses were spurred first by comments made by Jay Powell in testimony before the Senate. There, he said that inflation is too strong and rates would need to go higher, so they're having some issues getting inflation under control. It's going higher than the market's expecting, sending chances of a half-point interest rate hike to more than 80%. But that's not all, guys. Then, SVB Financial Group, which is the parent company of this bank in Silicon Valley, told investors it was forced to sell securities at a loss. So they had to realize some losses, not good, because of dwindling deposits, sending the stock down more than 60%. And it took the rest of the banking sector with it. And boy, did it, guys, because these are some pretty big losses for a handful of banks. Now, we see here we got Bank OZK. We've got pretty much regional banks here on the left-hand side. OZK down near 14%. LNC down 13%. CFG, Citizen Financial Group, down almost 13%. And then we've got the bigger banks on the right. Bank of America down 10.6%. JP Morgan down almost 10%. And then Citigroup down 7.16%. And even in my own portfolio, I took some big losses, guys. KRC down quite a bit. I think KRC was down like 9% today when I looked. Main Street Capital down quite a bit. AbbVie down. ORCC, 3M, Verizon down quite a bit, guys. So like I said, there was some carnage in the market. Sorry, Russ, I took you off there for a second. But okay, guys, that's what we're going to be talking about in tonight's live stream. I'm joined here, as you can see, by my good friend, Russ. So, Russ, thank you for joining me tonight, man. How you doing?
I'm doing well. You know, I want to start off by saying a little bit of an anecdotal story. So my dad, it sounds like Johnny Cash. My dad left when I was a kid, and it was my mom and me for, like my daddy left home when I was 3, a boy named Sue. But the point being is that my mom and I spent some time moving to a couple different apartments around the Chicagoland suburbs, and we lived in something called a garden apartment. Now, if you're not familiar, that's like a 3-flat, and it's if you're in the bottom part, if you're in the ground floor and you're looking out of a window and more than like half of your body is below ground, it's called a garden apartment. Or there's another word for that. It's called a basement. And as a kid, I was terrified of basements, but when it's called a garden apartment, I was not afraid. And the market, they tell us, I heard it on the radio, they said the market's crashing. It's a rough week in the markets. But if you look at it as a market of stocks, a market of businesses, then you can think of it as that it is less expensive. These businesses are less expensive than they were a week ago or a month ago. And when you do it that way, it's just not as scary. So cheers to that little.
Yeah. So, in short, just take a look, refer back to the thumbnail. Don't panic, guys. Don't panic. This could be good for us dividend investors. And we're going to talk more about that as we get later into the episode. But guys, first, let's do a quick cheers. Thank you all for joining us for another Dividend Happy Hour. Russ looks like he's sipping a Guinness over there.
I love it.
And I, unfortunately, am a bit empty-handed. I'm drinking coffee, not...
Oh, that's beautiful.
You guys know the diet started, but... Oh, cheers. Can we do this? Can we do this? Boom.
Look at that.
Anyway.
Look at that cascading.
Guys, this is like a dream come true for dividend investors, what we're experiencing this week. So let's drink to that. Let's drink to all the red in the market. This is what we dividend investors have been waiting for. So cheers. And with that, guys, let us know a couple things in the live chat. Number one, you guys already know these questions if you've been here before. Number one, what did you bring to drink tonight to the Dividend Happy Hour? What are you sipping on? And also, number two, what did you buy this week? It was a very good week for buying stock. So let us know in the live chat or in the comments below if you're watching the replay what you picked up. And I want to give some quick shout outs to some of you guys here tuning in so far. So we've got Steven, Pat, ex-Dividend Dad. We've got Thomas, Suzuki Man, Steve, Phil, Reed, Cody, Nick, Professor Joe, Luis, G-Man, Hallow, Weegets. Nice. The whole gang's here. We've got Amadou. We've got Shamir. That's who I was looking for. I said Shamir better be here.
Oh, he's here.
Charles, Christian, J-Lock, Haas, Mountain High, Lucas, Paolo. Man, everyone's here. Pat.
Kevin Burgess.
So, Kevin. Thank you guys all for tuning in with us. I want to put some of your guys's. We'll go through some of your guys' purchases and what you're sipping on there. So it looks like just going to do a quick scroll. Maybe we'll put a couple of these on the screen. I know SCHD has been a very popular one this week. I'm seeing a lot of that. I'm seeing some Kroger in the live chat, some KRC, which, like I said earlier, last time I looked at it, like midday was down 9% just today, which is crazy. I see Johnson & Johnson. Pretty much a lot of SCHD, Johnson & Johnson. So definitely some good stocks here, guys. Very good. Very good. But Russ, we talked about banks just a moment ago. You were telling me before we went live that you had some opportunity to buy a nice bank at a discount this week, huh?
Yeah. I bought, so I did a little bit of, I've been consolidating and streamlining. I'll do it. Shout that out. Real
quick. Yeah, Cichlid, thank you so much for the super chat, my friend. Down markets is how you get rich. Absolutely. And we'll talk a little bit. A lot of us dividend investors, I think, get it, but for those who don't, we'll get into that a little bit, I think, in this video. So stay tuned for that. But once again, thank you so much for the super chat. That's awesome. But Russ, what were you saying, man?
Yeah. So I've been streamlining and consolidating. I sold, actually, it may sound sacrilegious, but there's a big plan, I assure you. I think could be indigestion. I sold some Starbucks in my self-directed IRA. I only had 10 shares, but I was up 32%. And it's just, I've moved that into Toronto Dominion Bank, ticker TD. I also sold some Honeywell, which I was up about 11% on. And I'm using that to buy more. Actually, ARCC, I bought a little bit more, some Main Street Capital, but I bought 25 shares of Toronto Dominion this week, and I'm up to 85 shares of TD. Dude, they're safe. Like, I think that this Silicon Valley Bank thing is just completely overblown. When you look at companies, and I just looked at TD, I think 12.4% it's called their SETI, the Common Equity Tier 1. So in ways that I can understand, it's how much money they have to cover every $1 of depositors' money, as I understand it. And if that's not correct, somebody let me know. So, they're very well capitalized. They are prepared. They've been paying dividends since, I think, 57, I think. I think 166 years they paid uninterrupted dividends. They are just one of the safest banks. They have strong credit ratings. I think they're one of the world's safest banks. I think they're in the top 10 last I looked, or the last information I saw, but just completely overblown. And I don't know what you know about Silvergate. Yeah, they committed suicide this week, but
no.
The crypto lender bank, another one bites the dust. But Silicon Valley Bank, I think they were making, as I understand it, riskier loans to more tech startups, a lot of companies that burn through cash, and they were using a lot of that cheap money to do it. So it's kind of blown up on them. But yeah, what do you think about it? I don't know.
About the whole bank thing?
Anything.
I don't know too much about the Silicon Valley Bank thing, but one thing I did notice, especially when I saw KRC, and actually Kevin Burgess, ex-Dividend ad, and I had a nice little chat about it in the Discord group this morning, is REITs have been hit pretty hard this week too. Mm-hmm. So it's not just banks. The banking thing seemed to come as a result of what happened with SVB, but REITs is a totally separate issue. And it makes sense too. Higher interest rates, REITs, it's going to be more expensive for them to borrow money, so that it makes sense that they would take a hit. But boy, did they take a hit. I was really surprised to see specifically KRC down that much, and MPW as well, which obviously has done nothing but go down lately. And I that was a pretty popular one. I saw a lot of people buying that this week in the live chat. Man, that one's also been taking a hit. And I haven't looked at others like Realty Income or WP Carey or some
they
of
were
the
down.
other REITs out there. Yeah,
they were down. Dude, okay. MPW, they I think 40% of their revenue is from two companies, and one of those they had to lend money to. Like, can you imagine that? You wonder, and this is why I'm saying, like, I think a lot of people chase yield, and it's a common thing for a beginner. I did it myself. Believe me, I know. I've got scars on my hands from chasing yield. But I think with MPW, the market's telling us something, that they have such a high yield for a reason. I think it's really, really risky. And they had just the fact. Can you imagine? You're a landlord. Could you imagine if you had to loan money to one of your tenants so they could pay you rent? I'd be a little bit
Yeah.
worried, So
Yeah.
God bless
Absolutely.
if any of you are sticking with MPW. I hope, I pray, I'll keep my toes, fingers, and eyes crossed that everything works out with them. But I would just be, just aware that you could have a dividend cut coming.
Yeah.
I hope not, though.
KRC, I don't want to shove KRC down people's throats, but it's a really interesting one to me because this company seems to be firing on all cylinders. Like the financials still look great. They have a really strong balance sheet. They just recently and consistently they beat earnings expectations. So it's checking all the right boxes, but still it's really taken a hit in terms of share price. And I know that the raising interest rates is going to have an effect on that. That's no surprise. And I also think general sentiment around offices, which we talked about last week, we don't have to get into it again in last week's live stream, but I think that's having an effect on it as well. But one thing I was wondering, and Russ, you might know this too. I mean, it has a market cap of only $4 billion. So it has a really small market cap. And I was thinking, well, maybe that has something to do with it too. I think, and I don't know if this is a thing, you'll have to let me know, are companies with smaller market caps subject to more volatility than something like a Realty Income?
I'd love to know. I know KC's in the chat, and I'd love to know her opinion, but I know there's less coverage on a lot of these smaller companies. I know some of the bigger institutions won't touch the real small market cap, but I think a lot of volatility can be created or insulated by big institutions moving the share price. But when they're not involved a lot and it's more retail, I guess, because retail can be pretty fickle, people just like we're seeing now, just anything that's a bank, people are selling. And I don't know. I'd love to know Casey's. I'm sure she'll chime in a minute here, but yeah, what do you guys in the chat think? I mean, is small cap stuff more volatile? I'd like to know.
Yeah. And it would make sense too. And I think, I don't know if it was you who told me this, Russ, or maybe I saw a YouTube video on it, but I think it was a YouTube video where I think it was Warren Buffett talking about a lot of potential can be found in the small caps. Those obviously, because they're smaller, they have a lot more room to grow. So if you find a good small cap company and you stick with it and ends up working out, you could really see some solid upside potential. But with that too, you could probably also see the opposite. So I guess that would make sense.
I do know there's a lot more opportunity with to find mispriced businesses with the small caps because, again, like I said, they don't get that analyst coverage. And it's just, I think there's a better chance for them to be mispriced because a lot of the big institutions like Berkshire is not going to buy something that has a $200 million market cap. It's just crazy. That's change they find in their couch cushions and outside of Warren's office,
Yeah. Yeah, that makes sense. So I guess kind of going back to the whole the entire premise of this live stream, carnage in the market, not panicking. I'll ask you two questions. Are there any companies in your portfolio that you're going to be averaging down on? I know you mentioned TD. Are there any that you're seeing as a good discount right now that you want to take advantage of that opportunity? And also, are there any others who you might be concerned about seeing this drop in share price? You think, this could be troubled waters ahead for this company or these companies. Does that make sense? I'm not. That was a really weird way to ask those questions. But you know what I mean?
Yeah, I graduated college by answering less questions. So, for all of you and believe me, I've listened to every single Berkshire annual meeting. Warren dropped that one probably about 6 or 7 times throughout the years. So I didn't go to college. So you guys, that's a little anyway. But yeah, I've actually, fun fact, I got my Simon Property Group shares back today. December 30th, I sold them in the taxable account because they're a REIT and I've been wanting to hold all my REITs in the tax advantaged accounts. So I sold them and I got cute. I sold them at 116.61 and I got cute and tried to buy them back at 113. Don't know why I picked that, just $3 cheaper. And it never hit. And then they were up around 130. So finally with this sell off, I got them at 114.61. And, I guess I'd be a little bit worried about them because of the recession. But overall, every time I go to a Simon Group property center, here we have Gurney Mills. There's one in Pleasant Prairie, Wisconsin, an outlet mall. There's one off of I-88 in, I can't think of that, what town that is. But yeah, those, every time I go by, there's always cars there. They're always busy. I know you've talked about the one out there in Vegas, which I've been to. Dude, that place is sweet. The Caesar's Palace, shops. Right?
Yeah, man.
Yeah. But
real quick, Russ, we are officially over 200 viewers right now in the live stream.
Oh, dude, there we go.
Yep, I'll drink to that.
Beautiful.
Thank you guys so much. We hit this last week, and this is a really cool milestone. So thank you guys.
Yeah.
Are there any that you're worried about though, Russ?
Yeah, I guess Simon Property might be the one.
What about I know you're still holding Intel.
Oh God, dude, Intel is just that's kind of an afterthought. I'm not going to sell them. I'm stubborn, and this is one of my problems. But oddly, they were up the past 2 days. They were up again today. I think they're up almost 2.5%, 3% today.
Yeah.
But I don't know, as far as just averaging down. I averaged down on Ares Capital. I averaged down on Nextstar Media. I think Nextstar Media is pretty cheap. I've bought 5 shares of them this week.
What were you telling me? You told me something really cool about Nextstar Media. Oh, it was the earnings yield. Weren't you talking about their earnings yield a couple days ago? We were texting? Probably. I don't remember what it was offhand, but I do know they're earning over like $31 of free cash flow per share, and the dividend is $5.80, I think. So it's like an 11% payout ratio. Just a really well-run company. And again, shout out to KC for bringing it up, and one I looked into, and dude, that one, the more I looked into it, the more I liked it. Became an investor. I'm up to 16 shares now. Here in Chicago, they own WGN radio and television station, so that's kind of cool. And I've been averaging down on them. Ares Capital, I guess maybe the BDCs, there could be some spillover effect, maybe, but they're so well diversified. I mean, that's why I don't think it's very similar to Silicon Valley, because, dude, they are all about those tech companies, from what I understand. And when we look at like a Main Street Capital, dude, they're just so many different businesses. Industries. I mean, don't they have like over 200 something different? I could have that crazy. Number wrong, but it's a lot of. They're invested in a lot of businesses. Yeah, if anyone knows that, let us know. But so it's just, I think there was too much of a panic. I think people are going to start to realize again the irrationality of the stock market. Mr. Market can be pretty moody, and we saw Mr. Market in one of his manic depressive moods. Manic depressive? If you're manic, you're happy, and you're depressive, right? I don't know how that goes. Man, what do you guys? I don't know. I've heard people be manic depressive, so I think it's when you're really happy. You're just really sad. Mania, or a manic episode, is a state of mind characterized by high energy, excitement, and euphoria.
There you go. So he was in his depressed moods today. Yeah, but I think this is why it's so good to be a dividend investor. There we go. Look at KC. Sorry to cut you off. That KC just had about the BDCs. They're 1,000 times more There you go. Yeah, and that's the feel I kind of get too. So that's why I bought more Ares Capital and Main Street Capital today. Yeah, but I was going to say this is why it's a good time to be a dividend investor, because this is a benefit that we get to enjoy, as opposed to if we were looking to buy something like a Google or those probably aren't the best examples, but we benefit from being able to buy stocks right now for a couple different reasons. I mean, obviously we get the stocks at a discount, but as many of you guys already know, we're benefiting from higher dividend yields too, higher cash flow return by buying at today's prices, and that's what it's all about. And I was telling Russ too, did I say this? Yeah, I texted you this today. I don't remember who said it. It was either Ben Graham or it was Charlie Munger talking about Ben Graham. But the quote was something like, all good investing is value investing. So, with what all these companies we're seeing right now, what was it? CFG down double digits. OZK, which is a great regional bank, down double digits just today, or just in the last week. KRC down 9%. You're able to buy these great or solidly performing companies at a better value. And that's
That's why it's nice to have some gunpowder. I wish I had some more on the side.
Hey, and I've been making gunpowder, dude. That's why I've been selling Starbucks and Honeywell, taking some of the gains, and
Yeah.
just, and again, this is something I learned from Warren Buffett and reading that, is that people think, like, he says his ideal holding period is forever, but okay, I mean, it's one thing to have a quote, and then it's one thing to look and see a really good opportunity, and to have another opportunity that's maybe not as good. So they'll sell the one that's not as good, but still a good business, good deal, and they'll put it into the better opportunity. It just makes sense,
Yeah. I've kind of been considering doing that with Chevron, just like taking some of the profits, kind of like you did with the companies that you trimmed this week, Starbucks, and what was the other one again?
Honeywell.
Honeywell. Yeah. Because I think my Chevron position's up like between 80 to 90% right now. It's really nice. And it might be smart, because that is a company that I would like to hold on to for a long period of time. And so with that, I'm a bit hesitant to sell the shares, but at the same time, man, it kind of would make sense, I think, to lock in some profits and reinvest that and do exactly what you said. Maybe put that into some other more opportune companies right now.
Yeah.
It's tough though. That's the hard part about investing is knowing if that's the right decision to make, if that makes sense.
Yeah, and that's something only you're going to be able to answer, I guess. And
You won't just tell me?
well, I give you my opinion, not financial advice type thing. I give me a couple more beers, and we'll rework your whole portfolio. And you know what? It's kind of funny that you say that, because I'm not emotionally attached to any of your positions. Like, so for me, like KRC, if I even had an inkling of like, I'm not sure about this, dude, it would be gone, But for me, I'm like, when you handpick something, and this is why dividend investing has been a blessing and a curse, because more of a blessing, because dude, I marry companies, like we talked about. You're not supposed to marry companies; you're supposed to date them if you trade. But I'm in it for the long haul with when I buy things, and it's a fault sometimes. But
I think that's a better way. I think that's a better way to approach it. Like buying with the intent to hold for the long haul, but also being able to be objective enough to know when there's better opportunities, or when it's, yeah, I guess when to get out. And having said that, people in the live chat or whoever's watching this could make that argument that it's time with Intel or 3M or some of these other companies. But like you said, it really comes down to an individual basis.
Sorry, I love it. Both Dan and ex-dividend dad, he said, have you thought about removing me from the friends list because I sold Starbucks?
No, but he will receive my harshest judgment. So
yeah, he's gonna give me the evil eye on that. And then we got Rick talk. Rick surfaces again.
Yeah, Rick really is a sneaky, surprisingly like solid company.
Hey, I think as long as we have a society, I mean, we know back in ancient Greece and Rome, people, I don't know, people enjoy paying money to see naked people. So, it's as long as it's legal, you can ethically disagree with it, but if it's legal, it's legal,
Yeah. So Russ, where are you at with SCHD right now?
Oh, SCHD. I think I have 36 shares.
You've been trimming some positions and putting that more into SCHD, right?
Yeah, I sold in my taxable last week Snap-on and Texas Instruments, because both of those are in SCHD, and that was in the taxable. And I sold those 9 shares of Texas Instruments and 6 shares of Snap-on, made a nice gain on each, and shipped that money over into the Roth. And then I've just been dumping that into SCHD, which now I'm up to 62 shares of SCHD, but I'm out of dry powder. So
is your goal, because I know you've got that spreadsheet where you can see where the overlap is your goal to just have as minimal overlap as possible? Is that what you're working towards?
Yeah, kind of. I'm looking to also, so I don't really talk about it on there. I have in our 401k through my employer, I have a big chunk of our retirement money, and the bulk of that is in VVIAX and VIGAX, I believe it is, which it's a Vanguard Value Fund and then a Vanguard Growth Fund. And I've just been trying to remove a lot of the overlap because the portfolios I share is what I just wanted to build outside of that, something I wanted to have a little more control over. And it's been a great learning exercise, sometimes not so good. I love it, dude. It's any money that's lost, as I say, is your tuition to the marketplace. As long as you stick with it, learn from your mistakes. Again, don't get too high, don't get too low. It's just money. As long as if you can't put food on the table because of an investment, then that's a problem. You shouldn't be investing with that. But dude, you learn and you make mistakes and you get better and you improve on it. And that's for me what has worked. And that's what I love what you're talking about and sharing on the channel with everybody,
I think that's a really good point, man. And I want to circle back to that because I've got a story that I think that actually happened today that I think ties in perfectly with that. But before, I want to get to this question from Kevin. He asked it a couple of minutes ago. What is your criteria for deciding when to sell the stock you really love? I think this is especially recently. I think we've been faced with a few examples where like we've really had to question this or think about this. Like when should you sell? When should you sell Intel? When should you sell 3M? And I don't know that I have enough experience to really give the best answer to that yet. I think I still need to get some more reps in and still need to take some hits with my stocks before I really get to a point where I decide I want to sell. I know I feel that with Intel and 3M specifically. There's not really any other companies in my portfolio where I'm kind of questioning the long-term viability.
Yeah. So when to sell a stock you love, man, it's a case by case basis because, I had quite the thing for AT&T, and in some ways I still do, but management there, John Stankey, which is just kind of a fitting name for him, I think they need a new CEO. I mean, it's just, even though he wasn't CEO at the time, he was one of the major driving forces in acquiring Time Warner. So, I know people have said, well, it didn't happen under his watch, but it's just, that's a stock. There's one. I don't know. You see us struggling. It's not an easy question to answer. I love it, Kevin.
Yeah.
I love when you make us think and struggle to come up with an answer, but it's a case by case basis. And I guess it depends where we're at with the rest of our portfolio and everything that's going on. So
that's a great point, man.
But I did it today with Starbucks. I did it with Starbucks. I sold them. I love them, but I still have them in other areas.
You thought you had a better opportunity, right?
Exactly. So there you go. I guess that's probably one of the big main criterias as we're figuring this out live. So I guess if you find you have a better opportunity.
Yeah, kind of thinking about this a little bit more. Like with those, I keep going back to those two specific examples because they're really the only ones I've considered selling out of. You hear Peanut?
Yeah.
Hey. Hi, buddy. But I think with both of those, I mean, Intel just reduced their dividend, but 3M, it's like, I'm down quite a bit, but it's still paying me a nice dividend. That dividend is still coming in. That's really why I'm buying it. So if it's not completely broken, maybe don't try and fix it. If I want to reallocate elsewhere, I guess I can. But for now, it's like it's fine just doing its thing. So I'm not in a huge rush to sell.
Mountain High would sell 3M over Intel. I don't know, man. I don't think I would. I think Intel or 3M is going to be okay. I think Intel is a little bit riskier, I mean, 3M's just got that litigation and they're both not in a good space, but for me personally, I think I'd feel more comfortable with 3M over Intel just because it's such a capital intensive sector and Mountain High. I mean, it changes so quickly, but they got a lot of government money, so they're going to be okay maybe for a minute here.
It's tough to say too, because there's so much noise about both of those companies that it's hard not to be swayed in any sort of direction just from reading articles and watching videos about what other people are doing.
Sorry, I'm reading the chat here.
So
Sometimes, hey, everybody watching, like for a minute here, I forget I'm on with him. I'm just like, hey, nobody's talking.
I was gonna I said I had a story. So earlier today I was at the gym, and I'm friends with the guys who work there, the trainers, the people who work the front desk and stuff like that. And so um, one of the guys, one of the trainers came up to me and he just was like, after you finish working out, like I want to talk to you about something. And I was like, okay, am I in trouble? He's like, no, I'm in trouble. And I was like, okay. So I went and talked to him afterwards, and he's like, hey man, I really want to learn about Forex. I'm like, interesting. So, and he knows that I'm in investing, and I don't know, like we've briefly talked about it before, but I don't think he knows exactly what I do, or like what I'm into when it comes to investing. And so I was like, do you know what Forex is? Not really. And I'm like, okay, well, this is kind of what it is. I explained it as best as I could, just kind of trading currencies sort of. And I told him, I don't know anything about that. I know it's quite a gamble. Not, well, kind of sort of. There's a science behind it. People do well with it, but it's super risky. Like, and so I told him, I get it. Like, I understand why you might want to go down that road, but I can't help you there, my friend. But I'm more than happy to tell you about what I do. I'm more than happy to tell you about dividend stocks. And he's like, okay, like that sounds cool. So next time I see him, I'm going to talk to him about it. But I know, it's interestingly enough, I know as soon as I talk to him about it, not gonna be interested, because I'm not gonna sugarcoat it. It's like, it's gonna do you well down the road, but like it's gonna take a long time to see results with this stuff. But
Yeah.
when I was thinking, why Forex? Why Forex? That's such a kind of a random thing. I was like, I know what it is. It's just there's people online who are making quick gains from it and stuff like that. So it seems like a tempting thing, but it's not a way to go.
Yeah, and that's the thing, dude. It's human nature. People want quick gains, and it's what I do. I tweeted out last week. It's surprisingly a lot of people liked it. I was like, dude, this is not a quick get rich quick thing. This takes time, and to do it right, it's I don't know. I tried the penny stocks. Guys know my story. I tried swing trading, and I was bad at it. Just held everything way too long and lost money. And oh, dude, I just sold Aurora cannabis today. So check this out, everybody. For my birthday I think it was 2018, when we're like right at the tippy top of the pot bubble, the weed bubble, I bought 100 shares of Aurora cannabis for my birthday because I was learning to write covered calls. And they was $10 a share. So I spent $1,000 on 100 shares of Aurora cannabis, wrote a couple covered calls, didn't get anything crazy. And then the bubble started deflating. Dude, all the smoke started going out of that weed bubble. And it just kept going down and down. They reverse split, which was awful. They did a 12 for 1. So my 100 shares became 12 shares. It was just a mess. I sold this week just to clear it out. I got $4.80. That's what I had left over out of $1,000. And at that point, I was just like, you know what? I just want to be done with this. I don't want to look at it anymore. And that's what you get, man, when you don't know what you're doing. And everybody's buying weed, buying crypto, buying blockchain. I remember anything blockchain. I think there was a tea company, Long Island iced tea or something. They became a blockchain company overnight, and everybody was buying it. It was just wild times, man. You get these bubbles, these manias.
Yeah. So Dan said, sadly, that dude, and this is going to be the case for anyone, I think, or a lot of people, that dude will keep looking for the 10x fast, easy investment that doesn't exist. I mean, my hat's off to him for wanting to learn more about investing in general and considering it. I hope I can steer him in the right direction. And that's not to say that one shouldn't go into Forex, but I don't think that's the best place to start. I think you gotta walk before you can run. I personally would never get into Forex, but like I have one friend, Russ, do you remember Johan? He used to make YouTube videos. Johan Lorenzo.
Yeah, he had tattoos, right? I think I remember.
Yeah, yeah.
Yeah, I remember him.
Super cool dude. I still keep in touch with him. He hasn't made videos for a while, but he was telling me recently that he actually got into Forex. He actually got into Forex, and he so far is doing really well with it. So people can do really well with it, but prior to that, like that guy was trading options. He was a dividend investor. He does a lot of other investing things. So he definitely was walking before he ran to Forex. But that's the thing. Like, I'm hoping I could make be a good influence on this guy and hopefully steer him in the right direction, point him towards some SDHD and be like, look, I know, I get it. It's probably not what you want. You're not going to retire or be semi-retired in the next 365 days. But if you do this for the next 10, 20, 30 years, I promise you, like, you will be farther along than you think. Like, that's just what it takes. And that's the thing. I don't this is human nature, I think, but it just sometimes it blows my mind because it's so simple to understand. Like, anything that's worthwhile, anything that is worth having and is long lasting and meaningful does not happen overnight, you know? And I don't know, and I get it, I guess, but it still blows my mind that people spend so much time looking for all the quick fixes, but the right answer, which is the long-term answer, is right in front of them usually.
And I would tell him, okay, here's what you're going to do. You want a Forex trade? Okay. You're going to have 3 computer screens set up, and you're going to have to be ready minute by minute, moving in, moving out, moving in, get familiar with charting. And it's like reading astrological signs and tea leaves. Like, it's crazy, dude. Like, what? Like, you're going to be biting your nails and sweating and on the edge of your seat. Like, I can find other ways to be on the edge of my seat without losing money that quickly. But sorry, the South Park thing popped in my head where the guy's typing and he's like, I don't remember what he says, but he's like, and it's gone. That's probably, you could find a meme for that for Forex trading. But, you know, it's just, again, this just solidifies in my mind why I love dividend investing, because we're just putting our money to work for us instead of it being the other way around, right?
Yeah. Real quick, Russ, 234 people in the live stream. This is a new record, guys. Thank you so much.
Love it, dude.
Guys,
Keep
thank you so much.
Records.
We are breaking records here. But that's the cool thing about dividend investing too, is you are also always breaking records. Like, it is a style of investing that always frequently grants you small victories. Every quarter, every couple months, you're getting a new record month of income, or you're getting a new high payment, you know, just from reinvesting into certain stocks. And so, you know, it does take a long time for sure, but along the way, you are given many small victories that I think keeps you going. What, buddy? Come here. Come here.
Bring him on.
Yeah, he's got a lot to say. Oh, there he is.
Nice.
Anyway,
Nice.
What were you gonna say, Russ?
What was I gonna say? I was looking at your cat thinking, like, my boy's not that big. He's a small little guy. Before we started going all cat talk.
Peanut's been getting into my whey protein.
I was going to say something really, really clever and smart, and you're all handsome and beautiful, lovely people. I don't remember what I was going to say, dude. Peanut completely just sucked out whatever was in there, rattling around.
And he's gone. He's out of here.
Yeah, all right, man. Let's see what are these people saying. Let's talk.
Yeah, let's go through some comments. We got about 20 minutes here in the live stream, so let's go through some of your guys' comments. I'm not going to scroll all the way up to the top and go through them. So guys, if you've got questions, I apologize, but please ask them again in the live chat. We'll start with this one right here from Leonardo, who wants to know thoughts on SCHD in main portfolio, so a taxable portfolio, not a Roth IRA.
What do you think? Dividends are qualified, right?
Yeah. Yeah, I mean, I think the taxable versus Roth conversation, what's going to be better and where you should invest, put certain things, just obviously more tax advantageous in the Roth, but I think timeline's an important thing too. When realistically, how many years down the road do you plan to retire? That's something to keep in mind as well. But
If I
Go
could
ahead.
say one thing, since it ties into this, I just read a book this week called "The Only Investment Guide You'll Ever Need" by, I think it's Andrew Tobias. So he wrote the original one in 1978, and then he keeps updating it. And the newest one came out in 2022. His advice is to keep your steady Eddie safe companies inside of your Roth, inside of a tax advantaged account. And this applies because you want your riskier companies inside of your taxable account. And this is kind of backwards to how I had it, because I had thought if I put in like Alibaba and companies like Neo that could blow up and they're inside the Roth, well, I'm never going to pay taxes on those gains ever. But the thing is, like we've seen with 3M, dude, you can't tax loss harvest. You know what I mean, guys? You can't tax loss harvest if you're inside of a a tax advantaged account like the Roth or the self-directed IRA. So I don't know if you caught that. It was in your ear, right?
Yeah.
Yeah. So you got it. But what do you think? Like, because right now, inside of my tax advantage accounts, like the Roth and the SDIRA, I have 3M, Intel, AT&T. I can't tax loss harvest. If I sell those, it's just realizing a loss and there's no tax benefit to it. So I thought that was a really interesting thing that you guys might want to think about when trying to consider what to put inside of a taxable account or inside of a tax sheltered account.
Yeah, that's a really good point, man. That's a really good point, and it is a bit more of a nuanced conversation than, well, you don't have to pay taxes in the Roth, so Roth 100% all the time.
Yep.
Yeah, so it
Yep.
definitely depends. What else we got here? Okay. This is kind of an interesting conversation, or an interesting question. What is the best way to find when a new company IPOs? Russ, I mean, let's zoom out a little bit. What do you even think about IPOs in general? Like, that's not really something you would jump for. You wouldn't really invest in an IPO typically, huh?
So IPO, usually not. It depends what it is. I invest in Albertsons, ACI, in 2019, but that's a 100-year-old company that IPO'd. There's companies that are private, or they're public, then they're taken private, then they go public again. I think we saw that with Levi's. What was the one that just went? I don't know. There's companies that will go public and private like that. They'll get bought out. But as far as IPOs go, yeah, they're just a little bit too they're just a little bit too uncertain for me when they're brand new. But spin-offs are similar to IPOs, right? It's a new company coming out, but I think spin-offs are a whole different conversation that I've been really interested in, because there's been a lot of times when spin-offs like AbbVie from Abbott have done really well, and I've been looking a little bit into Kenvue, which is what Johnson & Johnson's going to be spinning off. But a lot of times people will get spin-off companies and they won't know what it is. They'll sell it. Maybe it doesn't pay a dividend. They'll sell it. Institutions, if the spin-off is small enough, institutions can't legally hold it because it's too small for them to hold. So they'll have to sell it right away. So a lot of times spin-offs can be a great buying opportunity at the outset when those shares drop, like Warner Brothers Discovery. I was talking with Casey about them a while back. But as far as IPOs, I'd be much more interested in spinoffs. But IPOs, Dutch Bros, right? They IPO'd.
Yeah, but they have not been doing good since their IPO.
Yeah, and IPOs usually aren't going to pay a dividend. So for better or worse, you can ding us in dividend investors on that, not watching, not paying attention to some of these IPOs we'll probably miss. But yeah, I don't know.
Yeah, I don't really mess with them. Dutch Bros is a company that I actually really like. Like, as a customer, I really like Dutch Bros. I mean, I like Starbucks too, obviously, but I can't lie, I really like Dutch Bros. And so it's a company that I'd like to maybe invest in at some point. Maybe not, since I already have Starbucks, but it is a company I'm rooting for, but I wouldn't want to buy it right as soon as it goes public. Same thing with like Robinhood. Like, I don't think that, and I haven't looked at their share price for a while, but I don't think it's been doing well since they IPO'd. Actually, I'm gonna look it up real quick.
Which one was that? Robinhood?
Robinhood, yeah. So
Terrible,
no,
awful.
yeah. So just in the last, I mean, yeah, we don't have to get into it, but not doing good. So it's kind of tough. It's tough for IPOs. Anyway, moving on to the next question, guys. Alex here says he just joined. What are some of the stocks you guys are taking advantage of, given the last few days downward trend? I mean, we already talked about like TD. Are there any other companies that you have your eye on, Russ?
All of them. That's the problem when we get when we get like this.
Yeah.
The blue chips, they're usually it depends. They're usually the last to fall, but just because they're blue chip doesn't mean that they can't be volatile on the way down. But yeah, I've been buying Main Street Capital, ticker MAIN, ARCC, Ares Capital. Those are two BDCs. Those not everybody's cup of tea. They're a little bit riskier, but as I've been learning, they're designed kind of to pay out a lot higher yield. Simon Property Group I bought, Nextstar Media, ticker NXST. I've had my eye on Algoma Steel. This is a newer one that I've been kind of getting into and still digesting. I'm up to about 30 shares of steel company from Sault Ste. Marie, Canada. Shout out to everyone up there. And Boise Cascade, I bought them this week, started a position in a Boise Cascade. Dividend yield is under 1%. So this is one where I'm trying to look at it more like an investor and go for that capital appreciation and a super small dividend. I'm not buying it for that, but they are going to buy back shares and increase that dividend to return capital to shareholders. But dude, there's always stuff I'm buying. I almost bought another share of J&J, but I'm convinced it's going below 150. So I'd like to get it in the 140s. And getting close.
Boise Cascade's a good one. I was looking into that one for a little bit. They have negative net debt. That's fantastic.
Absolutely.
Really
strong company.
Company. Super strong company.
Cyclical though, but that's part of the problem is commodities. That's going to influence them a lot. So, but I'm holding it for years. I'll ride through the cycles. I'm in no hurry.
I'm really wanting to pull the trigger on Rollins. I know I've talked to you about that one before. I think that company is so nice, looking so great, but I just don't know about the price right now. That's one thing I'm still spending a little time with. I think it's still potentially a bit overvalued, so I'm trying to be patient with it. But my goodness, I want that company. If I could add any one company to my portfolio right now, it would be that one. And I'm honestly might even, depending on how the next few weeks go or the next couple months, I might even start, and I've never done this, but I might even start just like a small position just to keep an eye on it, just to have it, just in case it does go up from here, because it's really, really appreciated. But I think it's about 10% off of its 52-week low right now, so it is coming down. But I know for me, outside of that, I mean, you mentioned the blue chips, Johnson & Johnson. I would like to keep averaging down on that one. Lowe's it's pretty close to my average cost, so if it gets below that, I'll keep working on that. KRC, I'll probably pick up some more shares, not too much more, because I'm pretty happy with where it's at in my portfolio right now.
That's one. Christian J says he really wants to get into McDonald's. Dude, McDonald's is chronically overvalued. Premium price. You're always paying that premium price for McDonald's. They're just I think correct me if I'm wrong, but aren't they the world's largest real estate company or something like that? I think I read that. I could be wrong. And they're a franchisor, so I'm liking a lot of the franchise companies. I'd like to get into more McDonald's too, dude. So perfect example, guys, for everyone watching. I was buying McDonald's at I think 135 a share was the cheapest I bought it during the COVID crash of March 2020. But these irrational markets can lead to irrational prices on these fantastic businesses. And sometimes people just sell stuff to sell stuff, and there's no rhyme or reason why. And I bought, it's not going to come up for me now. There we go. My cheapest tranche of McDonald's was March 17th of 2020 at $139.50. But I was buying it at 155, 157, 183. But unfortunately, dude, everything was so cheap. I just wasn't buying just that. So I remember buying J&J, 3M, a lot of the big blue chip positions that I still have, I started then. So During the midst of market crashes and bear markets, you can just really build some life-changing wealth. It's a really great opportunity. So that's why I say don't be afraid of market. It's normal. It's cyclical. It's supposed to happen. Not having going, what did we go? 10, 11, 12 years of the bull market. Like that's not supposed to happen. So don't worry, people. I mean, great opportunity to buy great businesses, in my opinion. Not financial advice, even though we just
So
gave financial advice.
I want to put this comment up on the screen real quick. It's not so much a question, but I just wanted to bring it to the attention. So
No.
this is from Terry. His father passed away at the end of December, so he had to sell everything to pay for the cremation and start from scratch. Terry, I mean, first and foremost, my friend, my sincerest condolences to you. I can't imagine how difficult that is. So I'm super sorry for that loss. In regards to your portfolio, you will build it back up, and you'll build it back up bigger and better than ever, my friend. So sometimes these setbacks happen. Sometimes you have to take one step back, but you will take two steps forward. Just keep your head up and keep investing.
Terry, a setback is a setup for a comeback. And thankfully you had that money there and you didn't have to go into debt to do that. And you know why you shouldn't worry about it, Terry? Because money is the most renewable resource on the planet. I mean, you can always make more money, right? That's what we say. And I hope you had some fantastic time with your father, because time is the one thing that we can never get back. It is completely non-renewable, but money is the most renewable resource. Believe me, you'll make it back. You'll start again. You can make more money and you'll be fine for it. So yeah, condolences, man. Sorry for your loss.
And Terry, if you're ever in a pinch or anything, just know Russ has an extra kidney he's not really using, so he'd be more than willing to sell it for you and donate to the cause, right, Russ?
Hey, I'm a donor. I don't, when I'm dead, I've on my license. I tell everybody, I'm like, you know what, when I'm dead, just pick over me, whatever you need. You need an eyeball, you need, the liver might be a little bit worn out, but there's probably a few miles that'll be left on it. So,
yeah, but once
not
again,
to be,
Terry,
sorry about
just
that. Not
in
to
closing,
joke
Terry,
about
once
death,
again,
but-
super sorry, but just know all of us here in the community, we've got your back, and we're here for you, man.
And for everybody, dude, spend your
Yeah.
time wisely. Spend time
Absolutely.
wisely. You can't get more. You can get
That's
more
why
money.
that's why we do this too, That's why we do this. We do this to buy our time back and to have more time to spend doing the things we enjoy with the people we love. And that's when you get to the root of dividend investing, that's why a lot of us want to do it,
What
There's
is
more
that
important-
Aaron
more-
comment?
Oh.
Sell my Amazon shares and lock in a loss.
Should I sell my Amazon shares and lock in a loss to liquidate cash and invest in shares that pay dividend as stocks continue to drop?
Is if it's in a taxable, I mean, you'll get, as long as you don't buy Amazon for, I think it's 31 days, you can tax loss harvest that. So that can offset any gains if it's in a taxable account. And, we can't really answer that. I mean, we could give our opinion. Obviously, I think we're going to be all for that. I think Amazon, what do you think about them? Do you think they've got trouble on the horizon?
Maybe in the short term, but I mean, Amazon's one of those companies that are going to be good to hold for the long term. So it just depends how you look at it. Like if you think Amazon's still going to be, and I know they don't pay a dividend, but the same rules apply. If you think they're going to be a good company to hold for the long term, then right now, as they're going down, it might be a good opportunity to buy some more at a discount. If you have a 10, 15, 20-year time horizon, then it might be a good opportune time to take advantage of that. But if you'd rather reinvest into the things that will pay you cash flow, then yeah, why not? I don't know. Like Russ said, it's hard to answer that definitively. It just depends really what you're going for. So, were you looking at the comments?
Yeah, I was responding to Thomas. He wanted to know what the tax loss harvest limit was. So it's $3,000. Then a couple people beat me to it. Thank you. I didn't even know why I bothered. I was like, I knew you guys would get it. You guys are on the ball, sharp.
Yeah. Yeah. Any last questions? We've got about 5 minutes here in the live stream, I think. Yeah, about 5 minutes or so. I'm almost done.
J Mile, thoughts on MPW? red flag. Big red flag. In my opinion, caution. Caution. I'm hoping for everybody that's in it that they don't cut their dividend, but I would be not surprised and kind of expecting it. So, but we'll see. I think they're taking on, I don't know. There's a lot of issues going over there. A lot of issues that people are saying, a lot of smoke, I guess.
So Easy wants to know, this is a good question. And then before you answer, Russ, we're going to set some ground rules here. You have $1,000 and a gun to your head. Where do you invest? So let's establish some ground rules. You don't have to hold forever, but you have to hold it for 10 years, whatever it is, and it cannot be an ETF. It's got to be an individual stock. We can't use SCHD here. We can't say SCHD. That's a cop out.
Simple. So I'm sure you and I could answer it at the same time.
Yeah, let's do it on 3. But real quick, guys, let us know your answer to this question in the live chat and also in the comments below if you're watching the replay. If you had a gun to your head, $1,000, where are you putting it? You have to hold it for 10 years, and it has to be in an individual stock, no ETFs. So let us know in the live chat, the comments below. All right, Russ, we're going to do 3, 2, 1, say it, okay?
Yeah.
All right, 3, 2, 1, Procter
and Gamble.
Yeah.
It's just a no-brainer. It's just a no-brainer. Again, Warren always uses that. If the market was going to close for 10 years and I could not sell, it just Procter and Gamble. It just, they're not perfect, but I mean, it's pretty close to it. To it.
There's a couple other companies I'd feel really good about in the same regard. Like Realty Income, I'd feel the same way. I'd feel the same way about Apple. Microsoft, I don't know Microsoft, but same, McDonald's, Waste Management, Lowe's. There's Coca-Cola, Pepsi. There's so many good companies like that I think would fit that criteria.
Probably even Kroger. I mean, people are
probably even Kroger.
You gotta get food. What is funny? Dude, you got a super, I don't know the green. I don't know the colors.
Oh.
Oof.
Man, we'll answer this real quick. Then I want to see what some of your guys' responses are. So Alex says, thoughts on buying more Bitcoin at the current price? I mean, I don't have many positive things to say about Bitcoin, but just because I'm strictly a dividend investor. I have $0 invested in crypto. So I would say don't do it. Don't do it. Just buy more dividend stocks. But I would say that with anything. That's just, I don't know. I'm so biased towards dividend stocks.
Dude, my opinion is it's digital gold. It's still risky. And I don't know how you value something that has no cash flow and how you give something an intrinsic value that is not cash flowing. It's the same problem with gold. The only reason gold has any value is because people want it. And I know you say that, it could be with anything, but at least with a business, we can look at the fundamentals and the kind of cash it's bringing in and what they're doing. But with Bitcoin, it's for better or worse, I guess, digital gold. So it's risky. It's put it this way, it's way cheaper than it was, a year and a half ago or whatever, when it was $60,000 a Bitcoin. So risky.
There's just no telling what it's going to do from here. Just because it has come down quite a bit, I mean, there's still a lot of room between 0 and 20K, whatever it's at right now. So anything could happen in crypto, and sometimes it's hard to explain. It seems like there's just more chance that the movements are random. Kind of like you said, Russ, there's no cash flow, there's no industry tied to it.
It's the greater fool theory, meaning that you're buying it in the hopes that somebody's going to pay you more when you want to sell it, and I understand you could do that with anything, but one last thing I did do, word to the wise people, careful with foreign stocks. I did also liquidate my 20 shares of ticker ADRNY, which is Koninklijke Ahold Delhaize. And this is a Dutch grocer, big over there. My European friends love it, and I bought it some time back. But there's a foreign tax fee and then an ADR management fee. And all you had to know is that on the dividends I received, it knocked it down 19.4% with those two fees. So I ended up selling that, took an 8% gain. But yeah, trying to get more dry powder, consolidate that portfolio a little bit more. So always just be careful with, with foreign stocks. Some of them have fees.
Oh,
Look at you.
Alex, man, you don't have to keep doing the super chats. I really appreciate it, but and thank you, but you don't have to do that, man. But he wants to know, what dividend stock would you buy 10K in right now? Okay, Russ. New rules. We're both gonna answer this one. We cannot say the same stock that we just said. It has to be a different one.
Yep. Yeah.
So well, I need to think about mine for a minute. Do you know what yours would be?
And it has to be one stock.
It has to be one stock.
Oh,
10K
man.
in it right now.
Yeah, I mean, it's a hypothetical, so you could go either way with it. And it can't be an ETF. I mean, because I would, yeah. I don't know. I would like to say PepsiCo, but that free cash flow, and I did, let you guys know that free cash flow is up there, and it's a concern for me. But man, maybe Microsoft. I think they're going to be good to go for quite some time. They're so big. But I don't know. But what's the objective? Like, are we holding for a year, for forever? Are we trying to maximize dividend growth? Are we just trying to keep that money safe? Because if we're just trying to keep it safe, then, Kroger, I don't know. They're not going anywhere.
Yeah, and I'm trying to think about this from the lens of like what's discounted enough that seems like it's undervalued. So, and Kroger certainly fits that bill. Like if you had to hold something for 5 years or 10 years, obviously something like Procter & Gamble or Pepsi is going to be safe and they'll still be around. But I'm trying to think like what is a good buying opportunity right now? I really think KRC is a great buying opportunity. I think it's really undervalued. When we were talking in the Discord about it, Kevin showed us that Morningstar has a fair value for KRC like in the high 60s. Or somewhere in the 60s, but it was like 50% undervalued based on that. Based on the calculation that I've done with Kroger, discounted cash flow, multiples valuation, they were about 30% undervalued right now. So I really like Kroger. One thing that I'm still on the fence about, and I think this is why I haven't pulled the trigger with Kroger yet, is I need to dive a little bit deeper into their debt situation. Seems that they have a higher amount of debt, and the free cash flow to debt is a bit questionable still. I need to circle back on that, but Kroger's up there for me. Tractor Supply, I see Dan right here says Tractor Supply.
Yeah.
It's like that's a great company too. That's a sneakily great company.
It really is. It really is, dude. They I think I read something that I don't know how many years ago they were under $10 a share, I think, and now they're what, 200 something? That's a good one, man.
Johnson & Johnson's another good one.
Yeah, but they worry me with the litigation and they're splitting off Kenvue. So, I don't know about that one now. I mean, maybe 2 years ago, but it shows how quick things can change. I mean,
Kevin's saying T-Row. And I also saw some conversation about, which T-Row's a good choice. I also saw some conversation about Kevin doing a live stream. Man, Kevin, I would love to see you on a live stream, but also
we're committed, dude.
Yeah, sometime
you missed my comment.
Man, Russ, maybe next time you and I get together, we'll see if we can get Kevin on too. I think that'd be really fun for us all, for the three of us to have.
I responded to him. I said, you and I will be your first guests.
Oh, absolutely. Absolutely.
You didn't even know. I already made plans for you.
I would totally love that.
I'm serious. Yeah. I'm serious, Kevin. I mean, I'm serious. Absolutely.
No, I would definitely do it.
That'd be fun.
Mm-hmm.
I take you very seriously.
You hear that?
Oh yeah.
Siri's talking to me. No, it's my Siri.
I'm just kidding.
Dude, that would be amazing. I would have a new YouTube channel in an hour if my cat was talking. Are you kidding me?
Right, man.
That would be insane. I'd be the fastest to 1 million subs ever. All right.
But anyway, guys, I think this is a good. We got one more super chat, Russ. One more, then we'll we'll get out of your guys' hair. But
keep them coming. We'll stay on all night.
I will. If you keep super chatting, we'll stay.
Now you did it. Now you did
no,
it.
Thank you for the super chat. But do you think SVB collapse is full contagion or collateral damage to regional banks is emotional, overstated, or unwarranted? Dividend black swan plays. So do you think this is going to spread and this is indicative of maybe a bigger issue in the market and considerably more red? Or do you think that what we're seeing with the banks is just a response to SVB?
I think it's just a lot of people overreacting and just selling anything that's a bank and not understanding. And we still don't have all the details about what happened. So this weekend, I think by Monday morning we'll have a lot more clarity. A lot more things are going to come out over the weekend. But I think just retail, I think people are just way overreacting, and that's why I kind of went heavy today. And dude, I sold Honeywell to buy more TD because I needed more dry powder. So I'm
Yeah.
trying. I love it. I'm loving it.
Um, yeah, I wouldn't, I, I wouldn't let this freak you out when it comes to some of the other regional banks, like Bank OZK, Citizens Financial Group. There's one other one that I mentioned at the beginning. Oh, it's right here, actually. What other regional bank was it? Lincoln National Corporation. These are all really solid regional banks. So I wouldn't lump them in with SVB. It's just they're separate for sure. So, but anyway, Will, thank you for the super chat. Go Army, beat Navy. Is that game this weekend?
I don't know, dude. It's no
Is football
college
season
football
over?
now.
I don't know. I don't.
Yeah,
I don't.
it's
I don't.
time. Dude, it's time for March Madness.
I
Do
don't
you know what I
follow-
thought
don't
about
follow
doing?
Football.
So everybody, I was sitting in traffic and I was thinking, it would be cool because I think there's 68 teams that are in. There's 68 teams in the March Madness tournament, and there's 65 Dividend aristocrats. I think it'd be cool if you could have everyone vote on all the logos just for all the Dividend aristocrats to see which had the just logos, who had the best logo, doing a tournament like that. And I was like, that'd be too much work. It's
Okay,
time
we
for
got
that.
another one from Mountain
See?
High. Thank you so
You
much for the
started.
super chat, man. Double down on H-Ban. Do you have you looked into H-Ban at all, Russ? Huntington
No.
Bank shares.
No, I haven't.
I'm looking at their. I don't know much about them, but here, let me actually share my screen real quick. I should have done this before we went live, but let's look at some of these dividend stats because it's pretty interesting. Dividend stats are looking really good. Okay, so let's go HBAN. Okay, the really high starting yield, so 4.5% yield. Okay, 12%. We got that double-digit growth rate, and then we have 12 years of consecutive dividend growth. But if we go over to the dividend history, let's see. Maybe they've been paying it consistent payments for 33 years. So that's really nice. It looks like they cut it back in 2009, 2010. So obvious reasons there, and they've been building it back up since. So that looks really good. And I've not done any research into this company.
No,
but those dividend stats look great.
Haven't either, and I was trying to see what just Simply Safe. They give them a 50 borderline safe. Interesting.
Yeah, definitely would require some more research, but I would call that a triple threat in the dividend department. They've got the high yield, they've got the high growth, and some pretty solid consistency in the dividend. So that looks, just based on the dividend stats, that's nice.
Yeah, it looks definitely interesting. Yeah, I've never really looked into it either.
Yeah. Okay, well, I think we should get out of here before we get any more super chats because we'll be here all night. But anyway, for those of you who did leave us some super chats, thank you guys so much for doing that. You don't have to. Thank you all so much for watching. All 212 of you who are still here. That's just incredible.
Awesome.
You guys are the best. Kevin Burgess, if you're still here, we'd love to see a live stream from you. We'd love to be on a live stream with you. So whether it's either here on the Dividend Happy Hour or if you do a live stream, would love to come on, man. But thank you all so much for tuning in. Russ, thank you, man. I appreciate you hopping on with me tonight.
As always.
Always good being able to chat with you, man. You guys have a good weekend, and I will see you in Sunday's video. It's going to be a good one, so be sure to tune in. So see you guys.